So today we are with Captain Ray, yeah, and he's gonna be under the timer for only 1 minute, 60 seconds, only 60 seconds. He has to deliver a powerful strategy within this time frame, and if this time is done, automatically where he is, you definitely have to stop. So if you want the rest of the video, obviously you'd have to visit his YouTube channel. Okay, so are you ready, Captain?
Yeah, definitely.
Are you ready?
Definitely ready.
All right. So what are we delivering today? What is the strategy's name?
It's a weak strategy. I'm gonna find a powerful name for that one, but it's a very powerful weak strategy.
Okay. So are you ready to begin? Shall we start the counter?
Sure, let's go.
Shall we start the timer?
Let's get on with
Okay. So I'm going to click start. All right. 3, 2, 1. Let's go.
Okay, our ladies and gentlemen, so here I'm about to deliver to you a very powerful weak strategy. Did you know that you could trade Forex using wicks on a particular time frame? So, which I will deliver to you. So, for example, we have this wick that we have. Have you ever heard of what is known as the consequent encroachment, or what is known as the mean threshold, whereby you connect 50% of that wick and price has to reach that 50% level, and when you get to that 50% level, price finds resistance on that particular level. But in the event that price breaks that mean threshold or that consequent encroachment, price breaks and it comes to retest that zone, and you're looking for your buys on that particular zone. But in the event that price is respecting that mean threshold, you have to look for short entries.
Time up. That was powerful. Time up. If you want the rest, go to YouTube. Dismiss.
So for those of you who would like to get a deeper understanding of the strategy which I was explaining under the 60-second timer, you gotta watch this. So well guys, take a quick look at something here. Something that I'm gonna show you. As I was explaining on the rejection block, here we are on USD JPY on the 15-minute time frame. So this is what I'm gonna do. I'm gonna use this rectangle tool to connect the wick, right? Then I'm gonna take a horizontal line to mark the mean threshold, which is the midpoint of that wick. Some, as they would like to call it, the consequent encroachment. So this is the midpoint of the wick, which is what is known as the rejection block. So this area that we have marked on the wick, that becomes our rejection block, and the midpoint of that wick becomes the mean threshold. So look at something here. Look at how price was reacting on the mean threshold. Something interesting. See how powerful it is. Price was coming all the way from that price level down to that specific 158.793. Right, that's no coincidence that price just hesitates around this area and finds support on that level. So price just found support on that level and immediately it reversed. So if you had come across this, then you would definitely have taken a trade, a very good trade, right at that mean threshold with a stop loss below the wick, and you'd definitely be in profit. So this is a very powerful strategy. Right now we are looking at step index on the 1 hour time frame, and let me show you how powerful this thing is. The wick strategy. I connect the wick of that candle, that particular candle, the down close candle, right there, right? So we connect the whole wick after connecting the whole week, we connect the midpoint of that week. Just want to show you how powerful this thing is. If you put it into practice, definitely you come up with some good results. Look at that, look at that, look at that. Price just had to come to test the midpoint of that week. Quite powerful. And as soon as price tested the midpoint of that week, price reversed immediately. And this was on the 1 hour time frame. So you could have taken your entry on that mean threshold, the 50% level, with the stop loss below the week. On the previous candle, the wick was not that quite big, but then this one was considerably big. It was bigger, and I took it as a perfect example. So after connecting the whole week, you connect the midpoint and you see how price actually gets to react on that midpoint. And the reaction was so powerful. It was so powerful. If you were to take your entry right on that 50% level with your stop loss slightly below, let's see. Okay, how much are you risking? On a 0.1 lot size, you're risking $3. That means on a standard lot, you're risking $33, right? You're risking $33. And how much are you targeting from that? Like by now, on a standard lot, you'd have made $50 after risking $33. And if price is to push up further, perhaps to the next levels of resistance, that's like $100 on this order block. If you take it up to the buy side, that would be $243, right? After just risking only $33, that would be a very good risk to reward ratio, right? But then just look at how sharp your entry was gonna be if you had you taken an entry right at that point. Just look. This is a quite powerful strategy for me, and you definitely need to put this into practice, test it, get back to your past charts and look for more examples of this strategy and see how it turns out for you. Quite powerful. And by the way, don't forget to like and subscribe to my YouTube channel, Captain Ray 96. And for those who would like to trade with the same broker that I use, check for the link in the description below to register and get started. So let me show you how I applied this powerful wick strategy on this trade, right? So as I said, that we should always look for a considerable wick, right? A wick of a considerable size. So in this case, I picked this particular wick on this particular time frame, right? On this 5-minute time frame. So what did I do? I had to take my rectangular tool, right, and I had to cover the whole wick, right? We shade the entire wick. After shading the entire wick, the next thing is I take my horizontal line tool, right, and then I place it right in the middle of that rectangular tool, right in the middle of that shaded zone, so that we mark our consequent encroachment, or what others would call the mean threshold, just as I was explaining under the 60-second timer by Sagex, right? So look at what happened here, how price actually came, guys, to test the mean threshold, the 50% level, and price failed to close below. Rather, it just wigged through slightly. Price just surpassed this level slightly, but just a slight margin, and pushed back all the way to the buy side, right? And I took this trade a little bit late, but it wasn't bad for an entry. The first trade that I took, I got the stop loss hit. Let me show you, right? So I took the first entry around that level, right, according to other strategies that I was applying, and I knew that this thing had to go up, but then my SO was pretty too close and I got stopped out. However, when I noticed that we had a wick of a considerable size, whose consequent encroachment or mean threshold had been respected, I then gained confidence in taking this trade. Then I took an entry at that price level, as you can see, and look at how the trade skyrocketed. Look at that, and this was gold. Right? No wasted pips. I made a lot of pip out of this. I had to milk this thing out, right? So this is quite a powerful strategy. I was very confident in this setup because price had clearly respected the mean threshold of that level, you see, and left a rejection on that particular candle. So this was a no-brainer. This was definitely a no-brainer. Okay, so on to the next opportunity. So let me show you another real quick chart example. So we have a wick right there on that particular candle, and this is what I'm gonna do. I'm gonna take the rectangular tool. I mark the wick, the whole wick, and we take a horizontal line. We mark the midpoint of that wick, and that becomes our mean threshold. So take a look at this. Look at how price respects the midpoint of that wick. Look at that. So price slightly exceeded the consequent encroachment and then quickly reversed. It was just by a small margin that it exceeded the midpoint, and then price reversed. So if you had taken your trade, your buy entry from that 50% level with a stop loss right below that wick, then you definitely would have secured some good profit from that point. So for instance, you would apply 0.1 lot. You're risking $9, approximately 10, but for you to take it all the way up to $70. So this is something like 1:7 risk to reward ratio. That's a perfect risk to reward ratio. You see, so you don't go wrong with this strategy. All you just need is to apply it effectively and consistently, and definitely you improve your trading game. So make good use of this strategy. It's a powerful strategy. As they say that if you are not reading the wicks, you are trading blindly. So make sure, guys, that you read the wicks. Always learn to read the wicks. So you always need a wick of a considerable size, then you're good to go. Something like this, that's another example. Powerful stuff here. No wasted pips. Look at this. So we marked the whole wick. That becomes our rejection block, and the 50% of that wick, which becomes the consequent encroachment or the mean threshold. Price slightly exceeded the mean threshold, but then reversed. And look at how hard price was buying. Look at this. If you had taken a trade on that mean threshold with a stop loss right below, you're risking something like $17. But then how much are you making from this whole move? If you were to target the low hanging fruit, you'd be making $100. But if you were to try your stop loss and take it all the way up, you get up to $130. So this is definitely worth it. So put this strategy into practice, get to your past charts, backtest this whole thing, gain confidence and experience in how price moves. Always get back to the past charts, backtest them. Take your time, spend time on the charts to backtest this whole thing. See how this strategy works, where to apply your entries, your stop loss, your take profit. Always ask yourself questions. Had I taken this trade, would it be profitable? And if the trade was not going to be profitable, ask yourself the question, what factor would hinder this trade from becoming profitable, right? So that's how you grow as a trader. Make sure that you backtest this strategy. Don't just get on your live chart and you start trading blindly, but take time to develop your skill and see how best this strategy works for you, right? So so don't forget to like and subscribe for more videos. I will be uploading more videos on this particular strategy, and I will be showing you guys different ways of tackling this strategy, different ways of trading this strategy. So I wish you all the best.